for the time being. While we are expecting over 100 people today, so we're going to keep the doors open for another minute or two while people come in. But if you would, as usual, please just pop your name and your organization and where you're from geographically in the chat box, so that we can give James an idea of the audience today, both in terms of where you are in the supply chain and where you are in the UK. So just pop your name and your organization, if you would, and where you're from in the UK in the chat box. That will give James a good idea of the audience, and it'll also give me an opportunity to do a few shout outs, which I like to do, as you know, to mention the good people that come and tune in on a Friday lunchtime to hear what we have to say. So first up is Dawn Nichols from Hereford, from Taylor Lane. Dawn, you're very welcome. One of my biggest members from the STA there in Hereford. So Dawn, good to see you're in the audience this afternoon. And who else have we got? Oh, they're coming in now. Dave Williams from Wider Engineered Timber Systems in Preston. So already it looks like we're getting a good audience from my STA membership, which is good. Who else have we got now here? Now, can I get this pronounced correctly? Powell, is it Sakala? AIP Design in Dudley. If I've got that wrong, I apologize. Dave Harmer, Walker Timber, another one of my members up in Wisbeach. Ian Griffiths from Shakespeare Martineau, one of our strongest CE members in the Midlands. And I know Ian leads our procurement and productivity group, and he's also speaking at a leadership dinner next week. We've got Neil Humphreys from the University of West of England, i.e. a customer to contractors. Absolutely. And Helen Baker sits on our board in the CE Southwest area. John Freeman of Church Lucas in Nottingham. I've just driven back from Nottingham. I was at a dinner there last night. Mike Cheney, Wilmot Dixon, Matthew Elliott from SCF in the Southwest. We know you well. Ben Smith's in from Midas in Bristol. Luke Palethorpe from Galaxy Insulation in South Yorkshire. Martin Punch from Castle Oak, another one of the STA members. And then Charles Westbrook's in from Westbrook and Bell, Offsite Consultants in South Wales. Chris Meadows from Hastow Housing Association. You can see, James, we've got a real cross-section in this afternoon. And Deborah Somerville from Deborah Somerville, Chartered Architect in Bideford. So we've got folks in from right across the UK. So I'm going to open up. I'm going to make a start. So very good afternoon to you. My name is Andrew Carpenter. You probably know that by now, but just in case there's some new phases, I'm Chief Executive of the Structural Timber Association and also Constructing Excellence in the Southwest and the Midlands. And hosting these Friday webinars now are all my colleagues from the Constructing Excellence family across the UK and the CIOB in the Southwest. So a multitude of organisations coming together to bring you what we hope is a very useful series of Friday lunchtime webinars. Without further ado, before I introduce James, I'm going to hand over to Howard, who's going to take us through the house rules today. Thanks, Howard.
Thank you, Andrew. Good afternoon to everyone. We are going to be using, as usual, Slido. For those of you who are not a user of Slido, you can enter it in two ways. You can go to the QR reader. Most people do this on their phone, and that will take you straight in, or you can go to slido.com and enter today's code, which is LM090721, which is today's date. We're going to be using it in three ways. The first is a poll, and we'll bring the poll up in a minute and I'll take you through that. The second way is for questions. If you have any questions for James, could you please put them in the Q&A section, which is on Slido. If these questions are available for all to see, so if you think it's a good question or one you'd like to have asked yourself, you can put the thumbs up and that will take that question further up the chain so it can be answered quicker than the others. And finally, we do ask for your feedback on how you felt today went. So if there's anything we can learn from and improve for the future, that will be great. We will probably put that up about sort of 5 minutes to go from the end. We'll notify everyone on the chat space and we keep it open for about 20 minutes afterwards. So you don't have a rush to do that. So Abraham, let's have a look at the poll. Okay, already 3 people have gone into it. So let's go through the poll slowly and we can complete it as we go along. So the first question, please. What is your desired outcome behind your purchasing professional indemnity insurance? You can choose one of these. Is it the breadth of policy coverage, the lowest or cheapest price, customer service, the claims service, the retroactive cover, or access to specialists? So if you can choose which one you personally go for when you look at professional indemnity, that would be super. Next question, please. We're going to run through the poll afterwards, so you do have time during the presentation to complete this, so it's not a race now. Do you have a specialist PI broker placing your current D&C arrangements? So it's yes, no, or unsure. Thanks, Abraham. Let's go on to the next one. Are you confident that your current PI policy arrangements will respond sufficiently in the event of a claim? Yes, no, or unsure? An interesting question. What aspect of the professional indemnity market have you found to be the most challenging? The restriction in the appetite of insurers, the restriction in policy coverage, reduction in the number of insurers offering capacity, rising rates, or increased excesses? Gosh, I think pity we don't have more than one choice on
Oh, so
that.
it's all of the above, isn't it, Howard? I thought.
Oh, you can choose all of them, and can you? Right. Okay.
Well, I don't think you can, but there probably should be an option for all of the above, I would expect.
Yeah, because I mean, rising rates and increased in excesses would be an interesting.
I think there's a bit of everything there, but
Yeah.
let's see what the results say.
Okay. Righty ho. So we'll look at the results later with James after his presentation. And the last question is, what are you most interested in understanding whilst attending this webinar? Restrictions in available insurer options and reduction in capacity, coverage restrictions and exclusions, cladding and fire safety, other exclusion examples of language, 2021 market overview, understand market capacity and appetite. I like the last word, appetite. Continuing challenges, and what can firms do to mitigate their PI risk? So 17 people have given their opinion. It would be great if more people could answer this, but I'm going to hand back now to Andrew, and we'll go through the poll, as I've said, after James has given his presentation. So thanks for your time and thanks for your input. Over to you now, Andrew.
Thank you very much, Howard. I don't think there's any doubt that my inbox has been full of questions surrounding insurance for the past 12 months. In fact, it's only in the last few weeks that it's been overtaken as the #1 issue by availability and price of materials. But the insurance issue has been around, as I say, as a major issue for the whole of the construction sector for well over 12 months. So I was delighted when James accepted an invitation to come and speak to us today, particularly around PI. James it works for Marsh. He is the head of PI in the construction division in London, so he's very well educated, so to speak, on the topic, and an ideal person to come and give of his knowledge today. So James, thank you very much for being with us today. I'm sure
You're very welcome.
What you have to say is going to be very valuable. When you finished your presentation, what we'll do, we'll go through the responses to the survey. And don't forget, folks, you can continue answering that survey whilst James is speaking. And then if you do have any questions, as Howard's already said, please put them on the Slido Q&A rather than the Zoom that we're on now, because the Slido means that we can get them all in the one place. Anyway, without further ado, James, I'm going to mute myself, shut my video down, and it's over to you.
Terrific. Thanks ever so much, Andrew, and thank you for having me along this lunchtime on a Friday. As Andrew's introduced there, my name's James Bainbridge. I am head of the professional indemnity team based within Marsh's construction division in London. I've been in the role now for 2 years. I've been in that team for over 10. My background was one of being part of the prior Jardine Lloyd Thompson construction specialism division following our acquisition from Marsh a few years ago. We're now part of the Marsh division, but the structure is the same. So we are a specialist PI team within construction, purely focused on contractors, professional indemnity. So design and construct. We don't do architects, engineers, surveyors. Marsh's financial lines division are responsible for the placement of professional indemnity for businesses of that kind. But I can still, if there are questions in that area, touch on that a little. But our primary focus is design and construct. Thanks for having me along. I'll just share my screen now as I've put a few slides together for today. Here we go. So this is quite a broad overview going back a few years to give you hopefully some background, where we've come from, how we've ended up where we are, and hopefully a bit of good news or some slightly more positive news for the future. You know, it's been an incredibly challenging time for contractors renewing their PI policies now. I think we're probably well into our third, almost 4 years of renewals, certainly post Grenfell, when we really started to feel the pinch. So, you know, I don't want it to be too a negative presentation, but I think it's important that we talk about why we've ended up where we are and how we see things in the future for those who might not have all of the background. I'm conscious that a lot of you may well have heard a lot of this, some of it, from your incumbent brokers, whether that is Marsh or, you know, one of our competitors or not. But I'll try and move through this fairly quickly. It is a very broad subject, as you can imagine. But please feel free to jump in, post your questions, you know, in the midst of the presentation, because I've done a lot of these now. It's nice to have a little bit of interaction where possible, rather than me sort of droning on. You know, and let's try and keep it fairly upbeat for a Friday. So without further ado, so a little bit about our team. We are a specialist D&C team based within London, the London division. There are 11 of us, with myself overseeing all the various brokers there. So that's 9 in London. And we've also got 2 specialists in our Norwich office who also fall under my remit. Their specialism is more in sort of mid-market, smaller contractors, but they also have specialism on larger accounts. So as you can see, there's various names, details of them. And we've also just got headcount. We've got a chap transferring across from our claims team to join us later on in July, which is good news. That pushes the bums on seats up to 12. And I think, you know, and again, that's, you know, purely PI D&C. So, you know, Marsh recognise this is an area where we need, you know, bodies and more, because obviously the inquiries, as you can imagine at the moment, are quite significant. And this is an area where the team need to be stronger and stronger. So there's 11 faces or names on there that will soon be a company of 12. So to give you some of the background on why we've ended up where we have, the design and construct market has been struggling now in the professional indemnity space for a number of years. We first, under my previous life with a JLT hat on, we first started feeling the pinch for a tightening of the market in around about late 2017. In fact, our first white paper went out to our portfolio of clients in January, February 2018, that there were the beginnings of the hard market cycle on the way. We'd already had some major losses in the renewable energy space, largely waste to energy losses, where we'd seen many clients and contractors move into that space, and as a result, end up with a number of huge claims issues. I think under Marsh, or should I say what was JLT's portfolio alone, we were talking circa £500 million of losses arising out of waste to energy or renewable energy type losses, because it was felt, that these new technology, unproven technologies, weren't working in this country as well as they have done in other territories for a variety of reasons, which we won't get into now. But it's been a real issue for the PI market, and that led to, as I say, $500 million of claims. And many contractors now aren't even in that space and won't touch it. And you might actually see, that's quite a consistent question from professional indemnity insurers about whether or not contractors are still playing in that space. We obviously had the Grenfell disaster in 2017 now, which, I can't believe it's already 4 years ago, highlighting all these issues in terms of defective material, defective cladding, and those investigations are still continuing. We are continuing to see notifications and claims made in 2021. It's a real area of concern. The volume of claims and circumstances that have been made in the last 4 years is unprecedented. There's a huge backlog of circumstances, which at this point, we have seen, already a number of, major claims going through the books. Further unreasonable contract terms, onerous terms and conditions being passed down onto the contractors and down to the supply chain, fixed price contracts, FFP obligations, high levels of liquidated damages. Again, unreasonable contract terms passed down the chain, and then and then as a result, professional indemnity claims becoming more and more common. And then tight margins, construction cost, supply chain, big contractors working to very, very tight margins. And that again impacting onto supply chain as well. Uneven liability caps all the way through, and has resulted in unbalanced risk. These some of the background issues to where we've got, and this is just compacted onto the PI market, which equally has had its own issues. Also insolvency and other issues there, which I won't go into too detail, but obviously the issues that we've seen with Carillion, and then a number of mid-tier SME specialist contractors as well going insolvent. Again, more problems for the professional indemnity market. In terms of the insurance market itself, through that period, we saw a lot of consolidation, i.e., mergers between certain insurers. We also saw around about 2017, certainly into 2018, a huge volume of companies withdrawing from underwriting PI, Brit, Aspen, Markel, all the names that you've got listed there, and another big one as of August last year, which was AXA XL, who pulled out of our space as well. We had at one time 25 plus carriers that we worked with exclusively for placing professional indemnity, and that reduced to about 14 overnight. What that means is gaps on programs, reduced capacity, markets having to come in and write PI or grow, plug gaps, pushing rate, pushing premiums, pushing onerous terms in order to write that business. So a huge withdrawal of capacity from the market, all within the blink of an eye. Some of that, not all of it, but some of it driven by regulatory action from the Lloyd's insurance market themselves, the Lloyd's Performance Management Division, where after a thorough review, professional indemnity across the board, just construction, where construction was the loss leader, professional indemnity was the second worst performing class of insurance in Lloyd's of London. So as a result of that, a number of other markets closed their books and stopped underwriting professional indemnity, and those who didn't had to adjust their appetite and commit to turning their books of business around to make them profitable. And that is why we've seen these huge rates and premium increases and adjustments of these last 4 years. So to give you some flavour there, minimum premium requirements, QBE, huge name in our space, huge name, now won't touch PI construction without a minimum income to them of £250,000 for a £2.5 million line. In London, they were doing, you probably see 5 or 10 million of capacity. Out in the regions, they might be writing to, primary 10 million limits, 100% themselves. That all went in the blink of an eye. And they're not the only carrier now who are at that sort of minimum premium level requirement just to write contractors. Many others have cut back to around 2.5 million. And what that means is to complete a tower of insurance, whereas before you might need 2, 3 carriers, to place a 10, 20 million limit of indemnity, you now need 6, 7, 8 to get these things, to get these homes. And with that, with different appetites, they're pushing premium and they're pushing restrictions. Emotive approach to underwriting. I mean, it's obviously an area which for insurers, which they have to justify at the moment why they're even writing PI, D and C. So the lack of willingness to actually compete for business, very frustrating, not just for clients, but for brokers as well, where you can't generate competition for a risk because they don't want to be competing against their peers in the market and seem to be driving rates back down again, walk away from business because they don't necessarily need the income. And I think the biggest example of where we've seen that is in the single project construction PI market, whereas before, an underwriter or market might write a long period policy, 5, 10 years, have that immediate chunk of premium onto their books. Now, because they're getting what they need through the annual business, that market, I mean, it hasn't entirely dried up, but it's certainly restricted hugely, which, the volume of the inquiries that we've seen have also limited as well. But that's certainly become an issue because they don't need the premium. They're getting what they need through the annual business and the rates that have been pushed on those. Underwriters taking a more global view, consistency. I mean, that's a wider global matter rather than the UK, which is what we're here to talk about. But certainly, we've seen, whereas before different territories across the world, whether it's Liberty, London, Far East, Australia, may have different appetites and approaches towards design and construct. They're now all much more joined up with one another, and you have seen the issues in London and the UK market also blend in or bleed into other territories globally as well. Ventilation on a program, if you've got 3 or 4 layers of a placement to get to your limited indemnity, your 10, your 20, your 30 million, whatever it might be. Previously, you might have a carrier, QBE certainly, one who used to do this. You might write your primary 10, your 10x10, and be on the 2020 as well. That has really been pulled back severely. They won't write back-to-back layers. And again, that just compounds the capacity issue because you've got gaps on these programs. You need to bring in a new market to replace that gap, fill that gap, and they'll come in and they'll look to try and push and possibly take advantage and push those rates further than the incumbent markets already have. What many of you might have seen as well is the restriction on cover. I must say, speaking from a London point of view, we, majority of our portfolio for many years, there's always been an aggregate limit of indemnity basis. And you still see out in the regions, any one claim for contract still being quoted. Entirely overnight, and limits being moved from AOC to AG. What that means is, what that's meant for many clients is, now unable to comply with contractual obligations for any one claim cover, and having to renegotiate their contractual terms, or in order to meet those contractual terms, try and build in reinstatements into the limit of indemnity instead. And as a result, may have to increase the limit to apply those reinstatements. What comes with that? More premium, more cost. It provided insurers are prepared to actually quote. That's been a significant problem, and I still don't feel, because we are still seeing requests, demands for any one claim from employers, that the message there isn't always getting through that AOC, any one claim, is all but gone from our space. Certainly in design and construct. In architects and engineers, I believe it's still available, and certainly in the lawyers' PI space and accountants, that's the norm. And I think sometimes when these lawyers are drafting these contracts, then they assume that that's available to contractors. It isn't in designing and construct PI, and it hasn't been for many, many years. There are ways and workarounds, as I say, with reinstatement provisions, but it's the cost. It's the cost that is being really hurt. Another 10%, another 20% to build in some reinstatements. It is a very, very difficult message to get across and finding, albeit these last 6 months or so, we've certainly seen some employers beginning to take notice of what has been going on. Obviously, we as a team, have had to write quite a few letters to employers, where limits have changed from AOC to aggregate, explaining what's going on in the market, and hopefully we are beginning to see a little bit of realization that it's not a case that the contractors being difficult, it simply cannot get the cover that they used to enjoy. There's a slide there around how reinstatements can work. I'm going to send this round at the end rather than pick through this because I'm just conscious of time. That is an option that's potentially available to contractors to comply with AOC requirements. And I think, clearly the major issue has post-Grenfell has been the restrictions for cladding and fire safety. It's a hugely controversial and difficult topic because, I speak from a relatively privileged position. I'm lucky enough to work for Marsh, I work for the London division. We have managed to maintain a modicum of cover for a lot of our clients, but I appreciate that is not the case and not always available to every contractor working in the market from the large to the SME. What cover there is still available has been restricted all the way down to rectification costs only. You'll get no reinstatements, aggregate limit, no consequential loss cover, and highly punitive excesses for each and every building in each and every site. So for the majority of our clients who've still got the luxury of that cover, we're talking very high 6-figure excesses, 7-figure excesses and above. And quite frankly, with the volume of notifications and what's come through, so that sort of excess level applied, you might even argue that they're excluded, almost excluded. The cover's almost excluded itself. In the wider market, we're acutely aware that total exclusions for cladding and fire safety have become far more prevalent because insurers can't accept more and more exposure and more notifications of that kind. And obviously, it's problematic if you have a main contractor who has got rectification cover for cladding and fire safety, because they might not appreciate that lower down in the supply chain, that cover just simply isn't being made available to those contractors, and it's become a real problem in the contractual chain, to the point where large contractors are saying, well, we can't find people who to do this work for us because they can't get PI for these activities. There's an example there again of some cover for cladding and fire safety. This is the memoranda that for those who still have an element of PI for cladding and fire safety. This is the language which you would likely see. This was in fact drafted by JLT. In fact, post Grenfell, when we first started to see exclusions, or the market begin to push exclusionary language in sort of late 17, early 18. There's an example there. And again, send this round. And as I say, the reality is, particularly in the SME and mid-market space, cover's just not there at the moment. Total exclusions. Those clients who've managed to maintain that may have long-standing relationships with their insurers and relatively healthy claims records as well. which does help. But equally, they may be able to wear a very punitive excess to demonstrate that they have got some cover. It's incredibly difficult. Even at this point in 2021, my team, when we have a new business inquiry, we will not make a commitment that if we have somebody come to us who has got exclusionary language in their policy, that we will be able to improve on that. So a lot of carriers, they won't write new business now without some form of exclusionary language for cladding. Okay, so it's a hugely difficult area. I can say that Marsh, not my team, because we're obviously at the business end of these issues with the insurance market, I can say that Marsh, and we're not the only broker, but Marsh have been in discussion, working party with the UK government to try and work on some solutionary type products for this concern, but it's still some way off of settling down because, as I say, we're in 2021 and we are still seeing the goalposts move on what's acceptable and what's not. And as a result of that, we are still seeing notifications coming through, which is concerning. I expect there'll be a few questions about this. So that's kind of what's gone before. All right, that's the sort of negative bit, hopefully, and you've probably all heard a lot of this stuff already, as I say, but it's important, I think, to give you some context about where we've been these last few years, and it's been very challenging. Just delivering this constantly bad news to clients and or prospects, but in 2021 we have seen a bit of settling down. So market capacity, withdrawals, we saw a lot of markets go in 2018, but since AXA XL withdrew in August last year, which I think frankly wasn't a great surprise to anybody, that's it. We haven't had any more capacity. We haven't had any more, many more pullouts. We've actually, in fact, seen more carriers entering the market in 2021. And there's a couple there. Convex, I mentioned, HDI Global came in, started working with us last year. Munitus is another Lloyd's-backed startup, writing D&C. And a number of the legacy insurers now have begun to actually look to actively grow and pursue new business, which, again, creating a little bit of competition, again, which has been great to see, particularly these last few months. One of the major frustrations for us as brokers is just not being able to generate that competition. Whilst we are in a hard market cycle, we have been for 3 years, or should I probably just say the market at the moment, frustration because nobody wants to write anything. That's the whole point. When the market starts to grow and premiums increase, the markets, that's when they start to top up the coffers again and write business. And nobody's been doing that these last couple of years. It's just been highly cautious. Well, we are beginning to see markets, look at construct and say, well, the rates are now where we need them to be. The excess levels, the coverage adjustments are now where we feel they need to be. So they'll write a bit more. And we have had some real success in the last 5 months or so in terms of softening of rate increases, some stability, excess, cover, capacity, and renewals going through where you're saying, well, these clients now, they've had the adjustment that you feel that they need. How much more rate, how much more premium increase can you keep, applying to these cases? Because it becomes, you wrote this business in 2019, 20 is new. Surely you wrote it at a sustainable level then. So we have seen some stability begin to come into the market, and you can see there from those average rate increases, which I mentioned, 40% in 2019, 20% last year. In 2021, we're at about 10%. There's obviously a lot of factors which go into affecting the renewal, not just the market. Obviously, the business activities, the claims record, growth in the business, all these things needs to be taken into account. But at this point, as of 1st of July, we're looking at about 10% rate increase. So hopefully some steadying of some of the pain that's gone through over the last few years, and with a bit of more market appetite, giving brokers a little bit more ammunition to push back on those markets who might still be trying to push rate, and they are out there. We need another 20%. We need 25% rate across the book. Well, we've certainly got a few more options and hopefully a few more tricks up our sleeves in 2021 to push back on some of the unreasonable adjustments which some of these carriers are still looking. Continuing challenges, there are still huge volume of claims. Certain sectors, specialist facade contractors, timber frame specialists. Very, very difficult areas which market. If you're in that space, you need to be meeting the market. You need to be presenting to insurers. A proposal form, isn't going to cut it at the moment. You need to be taking time out to meet insurers, meet carriers, present, talk them through your business. As I say, cladding and fire safety still being notified in 2021. It's a hugely problematic area, and at this point, insurers' attitudes towards that sector isn't going to relax anytime soon. But what you can do, hopefully, what are Marsh doing? Well, as I say, there is a working party engaged with the government to try and find solutions for cladding type risks and exposures. Our team, we operate a construction PI facility where we have managed to maintain a very broad policy coverage throughout this period. We've been successful in renewing all of our clients' businesses on time without extensions, even where we've lost capacity. That D&C facility, we're now up to 28 carriers right in construction PI. Now, their appetites might vary from the QBE, who need $250,000 just to even, come to the party or open the door, to others who are specialists more in the mid-market space as well. So it's quite a broad range of appetite. Each risk is price submit and underwritten on its own merits. Okay, so it's not a guarantee that everybody's going to write that risk, but with 28 carriers all committed to working with Marsh in London and to write that product, full civil liability wording, you'd hope that we would have a few in there who'd be prepared to write your risk. And as I say, we at this point we've not failed in getting something placed through the facility, which we're pretty proud of, to be honest with you. Also, from some very difficult years and delivering some very difficult messages to clients, which can wear a broker down. Nobody like consistently delivering negative news, but that's one thing where we have been very successful, is keeping that cover and keeping clients competitive and being able to meet all their contractual obligations. We've established a global PI committee. I mean, this is broad in the UK space, but certainly where we get inquiries all over the globe, and maybe some more directed, maybe now with some of the EU issues and placement issues that we've got. If London is struggling to write this risk, where can we find a better home for it? Is it on the continent? Is it Far East market, Australia, etc.? Redirecting inquiries to the right place, particularly single projects where London has not really been able to assist a great deal. So we're much more joined up. Certainly JLT, our PI team, we were our own bit. Now we're part of the Marsh group. It opens up a lot more doors to other markets. So we're much more joined up globally in order to try and leverage portfolios and share ideas, try and find solutions. Equally, we've got a European PI team who we're closely aligned with. We're very, very close in terms of the London team with our clients and their businesses. And in fact, some of our account execs are frankly more like, the insurance managers for some of our contractor clients. They're fully, embedded within their business. It's a very, very joined up relationship. And then we've also got, a huge amount of data, benchmarking information across all regions. But the purposes of today's call, for the UK, what my team do, we have benchmarking data, for main contractors, mid-tier, SME. And we can hopefully demonstrate to our clients, what's going on in the market, what's going on with their peers and competitors. It's all obviously confidential, but they can hopefully see that this broad brush that's been applied by PI has been blanketed across everybody. And what can companies do? Well, this is the message I think which a lot of you probably would have heard already from, whether it's from Marsh or some of our mates at Aon and Willis and Gallagher's and Aldens and all the rest of them. Engagement, it is easy, and I know it's not always that easy, depending on the size of the business and the risk. But engagement with your broker early, if they're coming to, a couple of weeks before renewal with a prop form, going to make life very, very difficult, because you just don't know when the rug's going to be, suddenly pulled out from under your feet, or one of the markets is going to suddenly have a change of heart in terms of appetite. Very, very, can be very, very difficult, particularly in the regions, I think. But engage early. Information is key. A proposal form with sort of limited information. It's got the gist in there, and that will be fine in the softer market conditions. You should be providing, there's risk management questionnaires, COVID questionnaires, detailed claims data, updated claims data. Providing that information in good time. You've got to be going into the market 6-7 weeks prior, possibly more if you can, prior to renewal, to account for all eventualities. And that information's got to be spot on. Anything, bits and pieces, it isn't going to cut it. To get these insurers to open their eyes and look at your risk, and not just another bit of paper across the desk in Lloyd's, or we haven't been into Lloyd's for 18 months or so, but it's all e-traffic at the moment. But another prop form across the desk, got to make it stand out. The broker's got to have story to tell on your behalf. Insurer meetings, we try and do as many as we possibly can for all of our clients, whether that's the main contractors or in the mid-market space, doesn't matter. Just come off of one today for a client of ours, circa 100 million turnover. Meet the market. It's an hour when they can talk through their business and they can sell themselves and talk about, what they're doing right, what they're doing differently, how things have changed, lessons learned of the last few years. Virtual meetings, obviously, in the current climate are most prevalent, but that's going to continue, after we all go back to the office, which hopefully is going to start, from the 19th. I suspect we'll start to get back in. But this isn't going to change. The insurance market has really embraced it, and I've been quite impressed with how much they have, because it is perceived as quite an old-fashioned industry, Lloyd's, etc. It's all face-to-face, which has got its place. But I think now for the mid-tier SME clients, who it's not necessarily as easy to get into London and meet the market, well, we can do this format now. We're all set up for it, so there's no reason why not. So, and companies themselves as well, I think, have got to, demonstrate understanding, what's happened in the market, what insurers are concerned about, and address those concerns. And as I say, we've had some real successes, and particularly one or two in the last couple of months. We went through some pretty torrid renewals the last couple of years, and we've been able to improve some of their terms and conditions this year, and they've been able to sit down and markets sort of reevaluated their business and their risk, because they've taken the time to meet with insurers and talk through what they're doing and what they're doing well. So, we're all in it together, brokers and clients. I don't work on behalf of the insurance market, albeit I understand the issues and why we've got to, and where we have. We've come pretty close to that in the PI market for contractors, say going completely, but it's been hugely difficult. Hopefully now we're seeing some signs that the stability is there again, the appetites are starting to improve, and hopefully some of the doom and gloom, which a lot of you will have heard, will start to improve over the next few years and beyond. So that's it for me. There's some questions but that's me for now.
Okay, thanks, James. You actually are fading out from time to time. I don't know what's happening. Once or twice.
Oh, sorry, Andrew. Yeah, I've had some problems with the mic. So look, if there's anything you've missed, you'd like me to go back to, then absolutely fine. And obviously take questions.
In view of the time, I think we probably shouldn't go back, but we should just pick out some of the questions.
Sure.
First of all, just say hi to Alex Leroy from OFP Timber Frame in Kent, and Tim Willis from Willis Consultancy. I'm just going through some of the comments on the chat box.
Cool.
Slider, that's been done. Yes, we've asked you to take the poll. So sound keeps dropping out. Yes. Okay.
Sorry.
Yeah. Right. Let's go to the survey, shall we, first of all? If we could just have the results up, please, Abraham. So here we go. 27 people answered. What's your desired outcome? And where are we? Breadth of policy coverage by far away seems to win it. Does that surprise you?
Look, I mean, do you know what? That is really encouraging to see, actually, because and it's not always just chasing price. Coverage is absolutely key, and which is great to hear. We in our team, our team, we, as I say, we've managed to keep a really competitive product over these last few years. Might come at a premium, but stripping out cover, driving it down, is not for me the way to mitigate what's going on at the moment. It's about protecting the business, protecting the balance sheet. That's what your PI policy is there for. Cat loss. So
James, we're going to have to whip through these questions.
Go.
We've got these to cover and 12 questions. So short, sharp answers, James, if you don't mind. Do you have a specialist PI broker placing your current D&C arrangements? 2/3 say yes, and the rest are either a no or an unsure. So a little bit of opportunity there for you, James, I would think.
Absolutely. Drop me a line.
What's the next question, or the next set of answers, please, Abraham? Are you confident that the current PI policy arrangement will respond sufficiently in the event of a claim? That's more mixed. 1/3 being unsure. So again, bit of opportunity there, I would have thought.
Indeed. Well, happy to have a look at your policy.
I was going to say, particularly for the people listening in, I think maybe you need to interrogate it a little bit more, maybe. What's the next one, Abraham, please? What aspects of the PI market have you found to be most challenging? Rising rates, not surprising there. Number one, but sort of fairly well balanced with everything else. Does that surprise you?
Yeah, that's about right. Bit of everything, but the rates, the cost, Andrew, and we're talking 1,000% premium increases. I mean, it's tough to swallow.
Yeah. Have we got one more, Abraham? Yes. What are you most interested in understanding whilst attending today? So challenges up there, mitigating risk, market overview, all high. Coverage restrictions is high. So in fact, just scroll down a bit, Abraham. I think there's another percentage at the bottom, isn't there? Yeah. So fairly good balance there, I think, James, which show an understanding, I think, of the market and what people need to overcome. Right. I don't think there's any more of the survey, Abraham, is there? I think that was the last one. Am I right? Yes. So we've got some questions. Now, these are going to have to be short, sharp answers, James, because we've only got about 10 minutes. So if we can have them one at a time, are there any particular terms in NEC, JCT that you consistently see clients asking? I think that's 4 that you consider onerous.
Nothing particularly. I must confess that a lot of those questions go into our wider contractors team rather than directly into my team. I think the major issue, the biggest issue I think we've already touched on that we keep seeing is this request for any one claim cover and that it's available, it's in the market. That's one where that's the biggest problem that I see from a PI perspective. Nothing outside of that in particular that's coming to mind. But what I'm happy to do, leave me with these questions, Andrew, and I'll speak to one of my contractors clients because. All
right, and then we can
circle back.
Yep. Okay.
Yeah.
Next question, then, Abraham, please. Right. Are you able to expand on the point around government-involved PI products, Marsh, working on behind the scenes?
It's confidential.
Okay. So watch this space.
No, genuinely, that's not being cute. It's a confidential.
No, I get that. I get that until it's launched. Okay, let's have the next one. Do you see AOC returning?
I don't, not anytime soon. No, I think that, for London, it had been against the grain for many years, even before 2017, 2018. So I don't see us going back to that sort of coverage anytime soon. But there are ways, as I say, with reinstatements, etc., that you can work around those requests. But I think, as I say, the employers need to start understanding that it's gone.
Okay. Next question, please, Abraham. Will we ever see a return to the soft market? Do you think we will see the same policies from 5 years ago?
I think there will be some softening of conditions. Absolutely. It's always cyclical. This hard market has certainly been the longest that I'm aware of. So you might argue that, it's now just a market, frankly, rather than a hard market. But, there are some signs. There's improving capacity. In terms of policy coverage, yes, I suspect, it will start moving back. But it's going to take some time. We've run very, very close to almost losing PI for design and construct, quite frankly, I think. And so, can it go back all the way to where it was 5 years ago? I think we'll just end up in the same situation that we're in now, I think, but there needs to be some leveling off, but there also needs to be some consistency as well for the future.
Okay, next question, please, Abraham. In your own time, Abraham. Here we go. Are you able to give indications of what you consider as high levels of LADs?
Well, I mean, your LAD is not your LAD. It needs to be what you want to do in negotiating LADs is for them to be expressed contractually, and it needs to be a reasonable estimate rather than unlimited, which has been some of the problems. So now where we cover LDs, they need to be expressed contractually and needs to be a reasonable estimate of loss rather than unlimited.
Okay, let's move on. We've got to squeeze in lots of questions in 5 minutes. Okay. Are there any resources out there that clients can look at to understand what may be considered reasonable? There's a good question.
I'm not sure I follow the question, to be honest.
I think what we're saying is, is there anything out there, any resource
in terms of terms and premiums, etc.,
that a construction client can look at so they can understand what's considered reasonable? How do they assess what the word reasonable means? It's a rather open-ended term.
It's quite an open question, isn't it? Yeah. No, I'm not sure. I'm not sure off the top of my head, to be honest.
Okay, well, maybe we'll feed that in the mix.
Feed that one back and I'll have a bit of a think about it.
Okay. What do you mean by ventilation? Is it M&E or is it?
Oh, right. It's insurance jargon. It means
okay.
if you've got layers of a policy, a primary 5, a 5x5 and a 10x10, say, the underwriter won't want to write your primary 5 and your 5x5, but they might come in and write the top layer again for you. So they've got a gap of ventilation between policies. Sorry, jargon.
That's answered that one, Anonymous. Do you see an end to the restrictive market, particularly in respect of timber framing, anytime soon?
Yeah, I think, as I say, the market is certainly improving. Timber framing still very, very difficult area. So what you need to do, there is capacity for it. There is market for it. People are writing policies. You've just got to be accessing the market the right way. We have clients who are involved in that space. There's no exclusions for that type of work at all, but it's getting face time and presenting, your business and your risk in the right way. If you get a prop, these underwriters, they get a prop form across the desk and it says timber frame specialist, it's going to take, they just won't give it the time of day at the moment. You need to be engaging, and your broker needs to be engaging them the right way. But there's capacity available for specialists of that nature. It's just finding it and making sure you do a full exercise. Okay,
thank you. Next question, please, Abraham. What size of contractor fits in with your line slip? Is it based on turnover?
Yeah, that's our construction. That's our facility. Look, we're very lucky in that. JLT, my old shop, we were the sort of market leader for contractors PI, and huge book of business, but we were never precious about who we worked with, whether it was main contractors, mid-market, mid-tier, whatever. We placed business, admittedly, for all shapes and sizes, admittedly a little bit easier 7, 8, 9, 10 years ago, or what have you, in terms of market conditions. But no, Marsh recognise that PI is a key area for our clients, which is why we've now got upcoming soon 12 bums on seats. No is the answer. We've got 9 specialists in London, 2 in Norwich, who have access to the line slip facility, all shapes and sizes, contracts, turnover, doesn't matter. We're happy to look at it.
Okay, thank you. We've got 4 questions to squeeze in, James.
Well, then.
Clients are driving up PI costs, requesting higher PI cover, i.e. 10 million for projects that have far less construction value. How do we address excessive requests?
Hopefully we can, if your broker, we can assist, we could assist in providing, sensible benchmarking data, as well as demonstrating the cost of insurance at the moment. As I say, we've had to write a significant number of letters to clients, addressing these issues. 10 million indemnity, the pricing can be monstrous at the moment. Your contract terms should be fair and reasonable, particularly, in what's available in the insurance market as well. And obviously, as we're seeing, the costs of PI can make undertaking that project unprofitable, quite frankly. So, you want to be working with your broker, working together, and they can provide some of that ammunition to help you go back to your employer to push back on some of these requests.
I think it's another opportunity for collaborative working up and down the supply chain. That's what it sounds like to me.
Well, that's also true.
Okay, let's have another question, please. We're going to skip over by a couple of minutes, folks. I hope you don't mind. I'd like to just finish these questions.
Sure. No problem.
So what is the PI industry doing to educate clients and their legal advisors on reasonable contract terms and increasing push to use innovative products and processes? So I'm assuming this is sort of aimed at the MMC market.
Yeah, I mean, obviously, from my point of view, myself, my team, and our wider construction division, we're very, very joined up with our clients. It is a very close relationship. We spend a huge amount of time with them. PI in particular, we aren't just wheeled out for 2 months of the year to deliver bad news and then disappear again. We're engaged with our clients all year round, managing them, working with them if there's changes in appetite and issues. And so, I suppose, that from my perspective, that's what we do. In terms of the wider industry, I mean, there's a hell of a lot of data and information, webinars, presentations going on at the moment. If you're on LinkedIn, whether that's through our team, through the Professional Indemnity Forum, the construction working parties, there's a lot going on and a lot of information to access at the moment, whether that's through LinkedIn or whatever it might be, because it's such a hot topic. Our team, we're very joined up with many of the legal insurance specialists, talking to them, monthly about some of the issues that we're seeing in the market and feeding some of that information back to clients. But there's a lot of groups at the moment that you can access, and working parties and what have you.
Certainly within the STA, we're doing a lot of work with the insurance sector under our Time for Timber campaign.
It's great, and actually, Andrew, this situation that we found ourselves in these last 16 months or so, I think it's almost led to a lot more of this, because we can do more of this stuff, which has been very, very good.
Yeah. Okay. 2 more questions then to squeeze in. What is your view on construction project all risk insurance?
Well, I mean, I can only speak from a PI perspective rather than the CAR, because I don't really. I'm a PI geek, and I don't really get involved in the wider construction market, quite frankly. Albeit I can find out a bit more. SPPI, single project PI, is very, very challenging at the moment. Long period policies, but the wider construction market, I think there's still challenges there now, and I think they've probably started to catch up to where we've been these last 3 or 4 years, as I understand it. And it's not just CAR, D&O, crime, motor, all of it. There's the insurance market as a whole is having problems.
Okay, I think we've got the final question just been put up. Do you have any involvement with designers PI? Most recently, architects PI doesn't cover anything fire.
Yeah, they're seeing the same problems. And I think the A&E market, architects, engineers, which say our financial lines colleagues are the specialists in that spot, because Marsh were historically stronger there than JLT and construction side. We were stronger. So that sits outside of my remit. But they're probably about 18 months, 2 years, probably behind where we've been. But the cladding, fire safety issues is exactly the same over there. I've got a paper which I'll be very happy to share from our A&E guys with the slides after this, to get a bit of context on what's going on in that market as well.
I think maybe what I could ask James is if Abraham, if you could share the questions with James, maybe you could just answer them with links to presentations. We'll distribute that to all the delegates then.
Very happy to do that.
James, thank you for that. We've crept over by a few minutes. I'm sure folks won't mind. Please do go to slido.com with the LM090721 to answer the survey, the feedback survey. If you want a CPD certificate for what you've heard today, then we have, as always now, this team up with MyProPass. The code for today is CE688. We've got one more of these webinars before we take a break, and that's this time next week, where we're looking at Where's My Order? Transforming supply chain efficiency, which is in effect a lot of what we've been talking about sort of behind the scenes today, is this trying to get the whole supply chain to work together to overcome issues. So we'll be looking at that next week. James, can I thank you very much for your time and your knowledge?
You're very welcome. And there's a few questions on the chat that I haven't got to, but so by all means.
Right. Well, we do ask people to put the questions in the Slido. That's why we.
Okay. But you're very welcome, Andrew. Thanks for having us on.
So thank you to my colleagues at Leaders Meets for for hosting it so well as always. Don't forget, this is probably the biggest weekend in all our lives. Abraham, have you got me a slide? Look at that. Football's coming home Sunday, 8 o'clock. Don't miss it. And let's hope this time next week we all meet again with a massive smile on our face. For now, good afternoon.
Brilliant. Cheers.